Welcome to your daily crypto news. Buckle up for a roller coaster ride of crypto news today. We've got Bitcoin price swings, institutional action, and some regulatory roadblocks. Let's dive in. A prominent crypto analyst believes Bitcoin's recent surge above $66,000 signifies the end of a one-month downtrend. They point to a key resistance level turning into support and predict Bitcoin could reach a bull market high by next winter. This optimistic outlook aligns with the post-halving cycle theory, suggesting a potential surge in Bitcoin's value in the coming months. The theory suggests that Bitcoin's price tends to follow a predictable cycle, with significant price increases occurring roughly every 4 years after a block reward halving event. The growing institutional interest in Bitcoin is further evidenced by the disclosure of spot Bitcoin ETF investments by Jaffe Tilchen and 4 other firms during Q1. Spot Bitcoin ETFs hold actual Bitcoin, offering investors a more direct exposure to the underlying asset compared to futures-based ETFs. Futures-based ETFs track the price of Bitcoin futures contracts, which can introduce additional risks and complexities for investors. This development highlights the increasing demand for regulated and accessible ways to invest in Bitcoin through traditional financial channels. Spot Bitcoin ETFs could potentially bring more stability and legitimacy to the cryptocurrency market by attracting a wider range of institutional investors. The recent Bitcoin price surge above $66,000 coincided with a significant spike in open interest and volume on derivatives exchanges. Open interest refers to the total amount of outstanding derivative contracts, such as futures and options contracts. This increase suggests rising investor activity and potential for further price volatility. Traders utilize derivatives to hedge their existing Bitcoin holdings or speculate on Bitcoin's future price movements. For example, a trader might buy a Bitcoin futures contract to lock in a future price if they believe the price will continue to rise. Conversely, they might sell a futures contract to profit if they believe the price will fall. The increased use of derivatives can amplify price movements, as large buy or sell orders on derivatives exchanges can influence the underlying price of Bitcoin. A dramatic decline in Bitcoin transaction fees has analysts concerned about a potential increase in miner selling pressure. Miners are the computers that compete to solve complex mathematical problems to verify Bitcoin transactions and earn new Bitcoins as a reward. Transaction fees are an additional source of revenue for miners, as they are included in the block reward for each verified transaction. With lower fees, some miners, particularly those operating with less efficient hardware, may be compelled to sell their Bitcoin holdings to cover operational costs. This could dampen the recent bullish momentum for Bitcoin, as increased selling pressure from miners could outpace buying pressure from investors. Crypto analyst Plan, known for his stock-to-flow model for predicting Bitcoin prices, has reiterated his bullish outlook. He believes Bitcoin will experience a significant price increase and go vertical in the coming months. Plan bases his prediction on historical data following Bitcoin halving events, suggesting a potential surge towards the end of this year or early 2025. The stock-to-flow model is a quantitative approach that compares the total supply of an asset to the rate at which new units are created. In the case of Bitcoin, the model suggests that its price should increase as the block reward for miners is halved every 4 years. A surprise withdrawal of nearly $500 million worth of Bitcoin from a major U.S. exchange just before the release of Key Consumer Price Index or CPI data has sent shockwaves through the crypto market. The sudden outflow could indicate investor anticipation of a potential decline in the market due to the CPI data. The CPI report measures inflation, and higher inflation could lead to tighter monetary policies from the Federal Reserve, potentially impacting risk assets like Bitcoin. Investors may have withdrawn their Bitcoin holdings from the exchange in anticipation of a sell-off if the CPI data indicated higher inflation than expected. This highlights the sensitivity of the crypto market to macroeconomic factors and the potential for sudden price movements based on economic news and policy decisions. The Biden administration's order to halt construction of a Chinese-backed Bitcoin mining facility near a sensitive U.S. Air Force base has sparked debate. While security concerns were cited as the reason for the order, the timing raised questions about potential geopolitical motivations. The incident occurred just as a U.S. firm purchased the very same mining facility, suggesting a potential attempt to limit Chinese involvement in the Bitcoin mining industry. This episode underscores the growing tension between the U.S. and China regarding Bitcoin and blockchain technology, and the potential for national security concerns to to influence policy decisions related to cryptocurrency. The world of meme coins took another hit as Factory Pump Fun, a Solana-based meme coin platform, fell victim to a bonding curve exploit. Hackers manipulated the platform's automated token pricing mechanism, leading to a significant loss of funds for investors. The exploit highlights the inherent risks associated with meme coins, which are often characterized by high volatility. The U.S. Senate dealt a blow to the Securities and Exchange Commission (SEC) by voting to overturn its controversial crypto accounting policy. The SEC rule required companies holding digital assets to record them at fair value on their balance sheets, which could have resulted in significant accounting volatility. The Senate's decision reflects concerns that the SEC rule was overly burdensome and could stifle innovation in the crypto industry. It is unclear whether the SEC will attempt to implement a revised version of the rule or seek alternative policy measures to address accounting concerns related to crypto assets. This development highlights the ongoing regulatory debate surrounding cryptocurrency and the potential for legislative action to shape the future of the industry. French financial regulators issued a warning to investors against the crypto exchange Bybit. The warning cited concerns about Bybit's lack of proper registration and potential risks associated with using the platform. This is not the first time Bybit has faced scrutiny from regulators around the world, raising questions about its compliance with local regulations. Investors should be aware of regulatory warnings and conduct due diligence before utilizing any cryptocurrency exchange. By choosing reputable and well-regulated exchanges, investors can minimize the risks associated with fraud, hacks, and other security concerns. That's all for today. We covered Bitcoin's breakout, meme coin woes, and the ongoing fight for crypto regulations. Stay informed and make smart crypto decisions with our daily updates. Don't forget to like this video, subscribe to our channel for more daily news, and hit that notification bell to stay ahead of the curve. Let us know your thoughts in the comments. What crypto story surprised you the most?